Good morning, everyone. Thanks for joining us today. Welcome to our half-year results for the financial year 2025-26. I'm here with Andy Mounsey, our Chief Financial Officer, James Bailey from Waitrose, and Peter Ruiz from John Lewis. So I thought I'd start by saying, to put these results in context, it's worth remembering what I said at our full-year announcement 6 months ago. I talked about three things. First, that thanks to the hard work of our partners, we have a strong and stable balance sheet, low debt and positive cash generation. Second, that we saw significant opportunity for growth in both brands and would focus on investing to unlock that. And finally, we were beginning to build real momentum through really focusing on our customers. And the results today reflect increased investment in the first half and show good progress. We're driving more sales, bringing more people to shop with us, and enabling both Waitrose and John Lewis to outperform their respective markets, all of which is a sign of our confidence in the future growth and development of both brands. We've also achieved our highest recorded level of positive customer satisfaction, building deeper relationships with membership in My John Lewis and My Waitrose loyalty schemes both growing, and all of this is a testament to the great work of our partners, and as ever, I want to thank them for their commitment, passion and care for the business. As you'll know, we are a half-two weighted business, and whilst we are reporting a half-year loss, this reflects the step up in investment that we have made, as well as the well-documented external cost headwinds. Our underlying profits have grown, and the momentum we built in the first half, combined with our exciting plans for peak season, gives us great confidence for the remainder of the year. So while we are reporting a half-year loss, which we expected to, we're well positioned to deliver full-year profit growth, which we will continue to reinvest in our customers and our partners. I'm now going to hand over to Andy to take you through the financials.
Thanks very much, Jason, and good morning, everyone. So let me just outline a few headlines from our financial performance this year, performance which reflects continued progress on our transformation plan. If I start with cash generation has improved for the third year running at 177 million in the half, up 30 million year on year, supported by a continued focus on becoming more productive as a business, coupled with improvements in our working capital this half. Improving cash generation has contributed to a strong liquidity position of 1.5 billion at the half. Our liquidity is made up of 1.1 billion in cash and short-term deposits and 460 million of unused credit facility, a facility which was successfully refinanced during the first half, replacing the previous credit facility. As you can see on the middle chart we're sharing today, liquidity has declined year on year. This is due to the repayment of our 300 million bond in January this year from cash reserves. Therefore, on a like-for-like basis, liquidity has strengthened 0.1 billion compared to this time last year. The repayment of the bond in January and the refinancing of the revolving credit facility in the first half means we have no external borrowings or facilities with maturity dates in the next 3 years. That provides a really strong platform for investment in our business over the coming years. This robust financial position enables us to continue with confidence to self-fund record levels of investment in our partnerships transformation. In the first half of this year, we invested £191 million in our business, a figure which includes our highest level of capital investment since 2017. Around 85% of that investment has gone into maintaining, refreshing and expanding our shop estates and upgrading our digital and supply chain assets, the result of which is improving experience for our customers and partners, and you'll hear more on that from James and Peter shortly. The remaining spend is delivering productivity changes that will continue to deliver improved results for years to come. We'll make a significant further step up in half two, with up to 600 million of investment expected over the full year. In terms of profit and financial performance, we delivered strong sales of 6.2 billion, up 4%, with Waitrose up 6% and John Lewis up 2% in the half. This has been supported by strong customer metrics with positive progress on both customer sentiment and 4% more customers shopping with us in the first half. Whilst gross margin was down in the first half due to the impact of new packaging taxes, more promotional activity as well as changes to our product sales mix in JL, we remain focused on controlling the elements we can, and good cost control and our ongoing productivity programme has helped us to respond to these dynamics and ongoing inflationary pressures. We delivered a further £103 million of recurring productivity improvements across margin and operating costs in the half, taking us to £770 million of recurring benefits to date, on track for our target of £900 million by early 2026. Additionally, we stepped up investment in our customers this year with an additional £32 million of investment costs taken in operating profit this half. That's driving the changes needed for partnership performance in the long term. This investment is across a number of areas of our business, including strengthening teams across commercial, supply chains and property to drive our growth agenda, alongside investment in technology and our financial services offer to deliver better customer experience. These operating cost investments will serve us well for years to come. In our first half performance, there are two non-like-for-like costs associated with new tax charges, including the well-documented changes to national insurance contributions and the full annual cost of the new extended producer responsibility levy. The incremental cost from taxation in the first half was £29 million, accounting fully for the decline year-on-year in our profit before tax and exceptional items from £5 million last year to £34 million this year. Despite the step back in first half profit performance from near-term headwinds, the momentum built in the first half, combined with our exciting plans for peak, gives us real confidence for delivering full-year profit growth. And I'll now hand you over to James to talk through Waitrose headlines.
Thanks, Andy. James here for Waitrose. Morning, everyone. I'm really pleased to report that our mission to transform and modernise the Waitrose business continues to deliver results. We saw record sales in the first half, passing the 4 billion mark for the first time ever, with year-on-year sales growth of around 6%, driven by a 3% rise in volumes and performance well ahead of the market. We continue to attract more and more shoppers both online and in our stores, and today nearly 10% more customers are choosing to shop with us than they were just 2 years ago. This ongoing strong performance is the result of consistently executing our strategy, delivering higher standards for our customers and focusing on what makes Waitrose different: our market-leading quality, higher ethical standards and award-winning partner-led service. On service, our investment in our Passionate Partners programme saw our customer satisfaction rise again year-on-year, and our Net Promoter Score is at a 5-year high. And we were again recognised with our 4th consecutive Grocer Gold Award for customer service. In the background, the transformation of our forecasting and ordering systems helped deliver our highest ever product availability as well, and I was delighted for the team to see this recognised when, for the first time in our history, we also won the Grocer Gold Award for availability. In this first half, we've taken some bold steps on our ethical sourcing as well, most especially by becoming the first and still the only UK supermarket to fully meet the Better Chicken commitment, but also by continued investment in our Farming for Nature programme, so we lead on regenerative agriculture for our customers, and importantly for me, coming top in the GCA's annual survey of retailers who work fairly with their suppliers. It's at the heart of what makes Waitrose Waitrose. We source the best food in the world to the highest welfare standards in the world, and we strive to do it in partnership with our suppliers and our farmers. And as the business gathers momentum, we're also choosing to accelerate our investment in the future. In the first half, we completed 7 major refurbishments, opened 3 new stores, announced our first large store opening for almost a decade at the Brabazon in Bristol, and confirmed that we'd be opening a new 360,000 square foot distribution centre in the southwest to support future expansion. And that accelerated investment is made possible because we're continuing to work hard to find more efficient ways to do business. In the first half, we delivered another 66 million of productivity improvements across store, processes, logistics and buying, which helped offset the new cost pressures. Looking ahead to the second half, we have even stronger plans coming through to drive our momentum, including our new enhanced loyalty offer, Little Treats, the return of a much-loved charity mechanic, and a Christmas campaign that we think will set hearts racing. So, in conclusion, a very strong half, and we enter half 2 with great momentum and so much more to come. Thank you, and I'll pass you over to Peter.
Good morning, everyone, and hello again to those of you we hosted last week at Oxford Street. Our focus in the first half has been clear: to invest for our customers and deliver a radical and relevant proposition. That focus is delivering results as we head into our all-important peak period. Despite a market impacted by ongoing economic uncertainty, in the half we have attracted more customers and outperformed our competitors. The key has been consistent sales growth, and we have now delivered that over 12 months. It's It's no coincidence that this performance comes as we mark the 100-year anniversary of our iconic brand promise, never knowingly undersold. This renewed focus is actively demonstrated every day. In the past year alone, our partners have empowered customers by matching over 300,000 prices, often right there at the till. This commitment to our customers is why we've achieved our highest ever sentiment scores and have been named Best Retailer in both the Which Awards and the UK Customer Satisfaction Index. This trust translates directly into market share growth. By way of example, in nursery, we have almost 40% market share on pushchairs. The first 6 months have also delivered our best ever first half performance for lingerie, kids, toys, beauty, outdoor furniture, wearable tech and gaming. And advisory services continue to motor with new spring-summer records, most notably with menswear styling, over 20% up, reflecting the trend for tailoring. Beyond value, we are making an 800 million multi-year investment in our stores, which will see every one of our 36 shops across the UK receive investment. You can see this already in our newly opened Liverpool Beauty Hall, the first of 6 to be completed this year. 2 new Waterstones have also just opened. We are also reaching out to customers in new ways through our recently launched rapid delivery pilot with Uber Eats. And while trust is our foundation, our focus now is on creating excitement. We will launch 100 new fashion brands this year, and from February 2026, we'll be bringing Topshop back to high streets nationwide. In home, we're launching a new direction, introducing 5 distinct design trends to inspire our customers. This is brought to life through our own brand ranges, brands such as Conran Shop, and exciting new collaborations, including an exclusive homeware collection with Deliciously Ella. And in beauty, we continue to add a roster of exclusive and desirable brands, including a new partnership with Fenty Beauty, and fragrance as a category continues to grow, 7% up this half in both demand and the space we dedicate to it. Our strategy to drive capital projects, market share and incredible value has, as planned, impacted our profitability in the short term. We also delivered a higher sales mix of tech and beauty with never knowingly undersold, which was as we expected. This combination was a deliberate first half investment to drive growth. This all allows us to look forward with confidence. Our focus now shifts to peak, where we see significant opportunity across all our core assortments, and especially to what this brand does best, Christmas. Already, ticket sales for our Santa experiences, where we partnered with Lego, have tripled versus the same point last year. Our just launched Christmas shop is up 200%, and we have gifting options for everyone, including double the number of brands for smart wearables, one of this year's big tech trends, with sales expected to be 50% up. All the investments you've heard about today are designed to come together to create a truly magical experience for our customers. Thank you, and I'll pass you back to Jason.
Thanks, Peter. I see I'm going to have to move quickly if I want to book a Lego Santa Grotto experience. So to summarise, our clear customer-led plan is working. The investment we are making is driving sales growth and outperformance across both Waitrose and John Lewis. We've got good momentum in our brands, with both Waitrose and John Lewis attracting more customers and achieving our highest recorded levels of satisfaction. We know our transformation is ongoing and there's a lot more to do, but with 2 incredible brands that have clear headroom for growth, we are confident that our strategy is the right one and that our customers will continue to respond positively to our investments. We've got a strong balance sheet that allows us to make the right long-term decisions for the partnership, funding our transformation from our own growing operational cash flow. Ultimately, it's our unique partnership model and our brilliant partners that remain our competitive advantage and will be what enables our future success. Looking ahead, whilst we expect market conditions to remain challenging, it's important to remember that we are a business with the majority of our profit delivered in the run-up to Christmas. The momentum built in the first half, combined with our exciting plans for peak trading, gives us confidence for the full year to deliver continued profit growth. Finally, my personal thanks to James for his exceptional leadership at Waitrose. He leaves the business in a position of great strength after an intense transformation, and we wish him all the best. I've got every confidence in Tina Mitchell, our retail director, who, as we have confirmed, will be stepping up as interim managing director to continue the positive momentum. And as has been confirmed, Tom Denyard will then join us as the permanent Managing Director of Waitrose in January, and we look forward to him building on James's great work leading the next chapter for Waitrose.